So Q3 delivery numbers are in, and as you guys expected, it was a record number. Now I get it. I got a lot of comments after the Q3 came out that it wasn't up to expectation, and now we all have to go panic sell, and because Tesla is not what it was before, and that's it. Go into zero. Tesla's finished. Come on guys, let's be more realistic. Let's go over the facts together. So in Q3, Tesla delivered almost 344,000 vehicles, which was less from my own prediction from 380,000 vehicles, and it was less from the market's expectation of around 350,000 to 370,000 vehicles. So overall, it was a disappointment. It really was, and you guys can expect in the short term, maybe this week and next week and maybe all of October, who knows? No one knows. But based on the missed delivery numbers, we can expect this. The stock can crash anywhere between 5, 10, 15, 20%, or it may not. But we can expect that because we are in a bear market. In these market conditions, if you don't hit your numbers, it's gonna get hit. Anything that doesn't hit expectations or even hits expectations is gonna get hit. And even sometimes when they go above and beyond an expectations, they still get hit. It's a bear market. The market isn't supposed to go up right now. It's supposed to go down until we hit a bottom. And even though I do believe we bottomed out in June, if the Feds decide to continue increasing the rates and do tightening and this war gets worse, I don't think we've reached bottom in that case. However though, I'm not a financial advisor. I'm just a guy on YouTube who has about over 10 years of experience in the stock market under my belt, and someone who's going all in into Tesla stock. Take everything I say with a grain of salt and always do your DD. But anyways, going back to the facts. So they missed delivery numbers. That's fine. However though, what I was first concerned when I saw the numbers was the production number and the delivery numbers. It's a massive gap. Over 20,000 vehicles not delivered. Almost a 5.5% rate of cars produced, not delivered. Usually it's about 1.5%, maximum 2%, but now it's 5.5%, and I got concerned. In fact, I got so concerned that the Tesla bear came here and said, you see man, the Tesla bears are right. It's losing demand. Nobody wants Tesla vehicles anymore. They want Neo, they want Ford, they want Nikola. Come on man, you have to understand, it's not all about Tesla. Nobody wants Tesla anymore. But then I'm like, oh man, that may be right. But then the paragraph right above this chart explains everything. So let's go through it together. Historically, our delivery volumes have skewed towards the end of each quarter due to regional batch building of cars. As our production volumes continue to grow, it is becoming increasingly challenging to secure vehicle transportation capacity at a reasonable cost during these peak logistic weeks. In Q3, we began transitioning to a more even regional mix of vehicle builds each week, which led to an increase in cars in transit at the end of the quarter. Now take this last sentence very carefully. These cars have been ordered and will be delivered to customers upon arrival at their destination. So, is it a demand problem? No, it's not. It's not a demand problem at all. The cars that are supposed to be delivered are delayed due to high transportation costs and logistics. That's why. So there's no demand problem here. If they have no demand problem and they didn't face that many shutdowns or lockdowns or upgrade pauses this quarter, and demand is very high, so this means only one thing. Their gigafactories are not fully ramped up yet. We all believe that it's in capacity. For example, China, the numbers will come out soon as well, is at full capacity. Fremont is at full capacity, but I think we have overestimated Berlin and Texas. I think these two factories are not ramping as fast as we may think they are. But anywho, now that we cleared the elephant out of the room, this is fantastic news. In fact, if you look at the production number, they did almost 366,000 vehicles produced. If they didn't have any logistic problems, they would have easily done 350,000, probably close to even 360,000 vehicles, which would be in line of expectation. So overall, I see this quarter as a good quarter. This was pretty darn decent. Now let's go see what the stock price will be in Q3 in the average, and as well as in Q4. If you guys are ready, man, then why hasn't that like button and that subscribe button, they haven't been smashed yet, man? Come on, man. Let's go. So here's a Tesla stock price prediction chart on the quarterly basis. If you guys are a regular viewer of this channel, you guys already know this chart. And even if you're a new viewer of this channel, this is a very straightforward, easy chart to understand. As you guys can see, we got the vehicles delivery, profit margins of the FSD, average vehicles sold in the thousands, total vehicle revenue, Q1 net income, and then the last 3 quarters only to get a full fiscal year of Tesla's total revenue and net income so we can justify the PE and figure out a realistic stock price for the quarter. Very easy, simple, and straightforward. Maybe the only thing you guys want to keep note here is the shares outstanding. I did dilute it every single quarter by about like 1% or so. So very easy and simple. Now let's get started. In Q3, they just delivered about 343,830 vehicles. Putting that in here, and voila, you see that? All the numbers pop magically. Very nice. Now, I did say in Q3, the average vehicle sold will be about 56,000. Although it should be more than that because of the EV credits, just keeping it 57,000 because of inflation and high demand. In Q4, I brought it down to 56,000 because hopefully inflation will be solved and cooler then. So let's see. In Q3, with about almost 344,000 in total vehicles delivered, in Q1 revenue total, we get about over $20 billion, which again, it's a record. And for the net income, I gave it a 18% margin to the revenue, adding the FSD margin as well. And that's right, guys, it's only FSD and vehicles, nothing else. No energy, no insurance, nor any other income sources that Tesla has. It's only these two strictly, vehicles and FSD. That's it. And the reason why I gave it an 18% is because in Q1, they did about 310,000 vehicles, and the margin was around 18% too. Even though we did like 30,000 more this quarter, it'll be more towards 19-20%. I left it at 18% just to stay conservative. Now, let's go ahead and find the stock price. And in order to do that, we gotta find the PE. Now, in the PE for Q3, I usually put it at 80 because right now we're at 100. If the earnings come out, it's gonna be a record earning. So most likely that 100 PE is gonna get dropped down to an 80 PE. If the macro environment isn't really that bad, but most likely it's gonna be way below 80, and we're gonna look at that too. So with an 80 PE for Q3, we get a stock price of $299. So almost reaching $300 per share, which honestly, I really did hope that it would be around the 310, 315 bucks, but because they didn't deliver 380,000 vehicles, which I thought they would, yeah, we're gonna get a stock price below 300. If you guys want to look at this at a bullish stance, then a 90 PE would make more sense. And with a 90 PE, we get 336, but I doubt we're gonna see that in this quarter or between August 21st to January 20th, unless the catalyst come up, like new gigafactories, maybe an announcement of a new vehicle, maybe like the 20,000, 25,000 cars. Maybe the Twitter thing will be dropped, or it'll just be, blown past. Maybe a buyback program will come. So there's many catalysts to come, but when is the key word. So we gotta wait and see. I feel like because we're in a bear market and, the environment is pretty darn bad, especially this year where everything, I dropped it down to a 70 PE because I think that's the bear case. I don't think it'll go below that, but we'll get to that in a bit as well. So 70 PE, we get about a stock price of $262 per share. I think right now the stock price is at the recording of this video is on a Sunday, is at $268. So $5 down. It may come lower. It may come lower, maybe to 65 to around 243. I think 243 makes a lot of sense. I think we could see an average around there for the next couple of weeks or so, and then it'll slowly go back up to what I think is around a 70 PE of around $262 per share. Now, I'm getting a lot of comments that we're gonna retest the lows, which was around 206, 205. Let's see what the PE would be in order for the stock price to be that low. So let's see, 60 PE, 224, no. 55 PE, there we go, 55 PE. We need a 55 PE to hit a stock price of 206, which is like the previous lows. So sheesh, we're gonna drop down literally our PE right now by half. I mean, if this happens, the stock market is in like a depression, it's in a bad recession, it's in a very bad and fearful place. Perfect time to buy. I mean, hey, I'm telling you, man, if the stock price goes to 206, I don't mind, man. I'm going all into Tesla stock, and I got cash ready. To buy a boatload of shares if it goes to 200 or below. Let's say 50 PE, that's $187 per share. Market cap, almost hitting $500 billion. That's insane. 2021 was at over 1 trillion. Now we're seeing half of that in I just don't see this happening. And if it does, it's probably a couple day opportunity, maybe an hour opportunity. If it hits this number, then it's going to shoot back up because it's oversold at this point. So that's what I'm saying. Maybe a P of 65 makes a whole lot of sense on the average around $243 per share between 21st of October, 20th of January, 2023. And that's being bearish. Right? So I'm thinking between 65 and 70. 243 to 262, I think we can see bouncing back between then. But let's put 65 PE and go forward from here. Now, year end in 2022, because we didn't reach at least 350 or 360, we gotta hit at least 500,000 vehicles in Q4 in order to even reach 1.4 million vehicles, which is a 50% growth year over year. That's difficult. But is it doable? If Berlin and Texas ramp up quick, it's absolutely doable. But based on their recent performance, it's hard to see that. But let's see what happens. Tesla is really good at surprising us. Good way and bad way, so let's see what happens. So what I will do here in Q4, I predict that in Q4 they're gonna do about 468,000 vehicles delivered. So let's put that in. That would mean Q1 revenue would be over $27 billion and a net income of $5.8 billion, which is absolutely a record number. For the net income percentage to the revenue, I put it at 20% here, not 18, because look, they're gonna 468,000. That's economy of scale. The more vehicles they deliver, the more vehicles they produce and sell, the margin goes up higher and higher. So 20% I think is fair, even though it should be closer to 22 or 23%. Let's leave it at 20%. What's crazy here, guys, is look at the total revenue for the last 4 quarters. Over $83 billion and net income over $15 billion. Like, that's crazy. Look at 2021, all of 2021, and look at all of 2022. I mean, obviously, all 4 quarters are done. The last 4 quarters, that's the full year of 2022. And look at that, it's a 3x. The net income or the earnings is a 3x. That's absolutely crazy. The revenue is not even a 2x. So, I mean, that's why I'm saying Tesla is a cash machine. And some of you guys out there, mainly the bears, are saying they're gonna go bankrupt. How, man, how? They barely got debt. They're gonna have like crazy earnings. Come on, man. Come on. But anywho, guys, let's go find the PE here. So I get a PE of 70 because if they do this number, and hopefully by Q4, man, which is January 21st of 2023 to April 20th to 2023. So literally 6 months from now, things will be a whole lot better. I really hope so. And if they do 468,000 vehicles delivered, we can see a bump in the PE. Because again, if the environment's a whole lot better, that means people are not that fearful. Investors are willing to pay more for a stock. So higher PE. With the 70 PE, we get $35 per share. And finally, the market cap will reach over $1 trillion like it was back in, I don't know, beginning of the year, I believe. But if the macro environment's a whole lot better, I can see a maximum PE reaching 80 and no more than that. I think this is the max it can go to, and that's about $383 per share and a market cap over $1.2 trillion. So that's not bad at all. However, though, if we take in the bear case, worst case scenario, I think 60 PE is the worst case scenario, and that will give us a stock price of $287 per share. I mean, not even hitting $1 trillion yet. If you guys look over here, total deliveries of 2022 is at 1.377 million. So they haven't reached the 1.4, and year over year growth is going to be 47% if they do 468,000 vehicles delivered. If you guys watched Dave Lee's recent video about a Tesla leak, about the massive growth video, he said that Tesla insiders are aiming to end off Q4, all right, now get this, about 495,000 vehicles delivered. Sheesh, bro, 495,000 vehicles delivered. If that happens, that's insane. That's about 150,000 vehicles more than this year. That's crazy. That's absolutely crazy. Now, guys, this is what Tesla insiders are aiming for, coming from Dave Lee. And as we all know, I'm pretty sure you guys watching this channel, you guys pretty much watch Dave Lee as well. Shout out to him, by the way. I do hope to interview him one day, but aiming for and actually doing it is 2 separate things. So let's hope for the best. They do 495,000 in Q4, but it's hard to see that with the current performance with Berlin and Austin. Or Texas. Sorry for being pessimistic, but I like to keep things realistic. However, let's go ahead and put 495 here and let's see what we get. If they do 495,000 vehicles delivered in Q4, the net income is obviously gonna hit records over 6 billion, but the margins is going to be in the 25%. I'm still gonna keep it at 20%. So look at that. As soon as that changed, 60 PE brought it up from 287 to 294. Now, obviously, if they get this number, PE is gonna jump to at least 70 on the average, which will be 243. And if the macro environment is very happy and everyone is going kumbaya and the future's looking amazing, a PE of 80, which would give us a stock price of $392 per share and a market cap over $1.2 trillion. So not bad at all. And if they do 495,000, we get a total delivery number of over 1.4 million vehicles delivered and a growth of 50% as Tesla promised. So let's see, man, let's see what they would do. We hope for the best, but plan for the worst. Realistic price ranges that I believe that could happen in the next 2 quarters or so is between $243 per share and $392 per share. So I mean, it's a massive range. Bruh. I get it, but this is including all scenarios. scenarios, the bear, base, and bull scenario. Now guys, let me tell you something what's gonna happen. And I know this for a fact is going to happen. At first glance, when I looked at the total delivery numbers for Q3, about 343,000 or 344,000, I was like, oh man, that's it. Tesla's going down. Man, no, look at the gap in production. But then after calming down and, looking at it in a more logical way, it was actually pretty darn a solid quarter. And honestly, I'm more bullish than I was last quarter and the quarter before that, and I'm just more bullish than ever. So what's going to happen now is that, first of all, we're going to see a lot of bears coming out and say, oh, look at this. 343,000, not even meeting expectations. Demand is going down. And what this will do is that it'll try to scare us retail investors, to panic sell. But if you're a Tesla bull and you did your DD and you did your research and you know the value of Tesla, not tomorrow, not the day after, but in 5 years, 10 years, 15, 20 years time, you're gonna buy a whole lot more shares like I am. I'm praying. I really am praying for the stock price to go lower because I do want to buy in the cheap before it rockets up to the flipping moon. Now, I may not go to the moon next year, maybe not 2 years, maybe it'll stay stagnant for 2 years, maybe it'll crash 50%, 30% in 2 years, but that's not the point. The point is not to get rich quick with Tesla. In fact, any get rich scheme is all shams. It doesn't work. It's all scams. Everything that makes a lot of money takes a lot of time. And you guys already know that, so why panic? Look at it, zoom out and look at what's happening with Tesla. They have no demand problem. In fact, they have a problem supplying demand. That's why the prices are up. They're at basically full capacity and they're making new gigafactories. Get ready for an announcement in the next couple of months or so. It's gonna be lit. Maybe in Canada, maybe in UK, maybe another one in the States. Who knows? The message is very, very clear. Panic is going to happen. Next week, maybe following up to the week after that, it's gonna go lower. My guess is maybe in the 250s, 260s. Who knows? But if it keeps going lower, I'm going to keep buying more and accumulating more shares. And we'll come back to it in 10 years time and let's see what happens. Because again, if you guys are in it for the short term, next 2 months, 3 months, 4 months, then you're not a long-term investor. You're a short-term investor. You're here just to make a couple bucks and move on to the next big thing. Tesla is probably not going to be the next big thing for another 5 years. Probably going to stay stagnated. Probably going to go down 30%, based on the market environments. If this bear market lasts longer, then you can expect this volatility with Tesla, continuing for a longer time. But, and this is a big but, if you go to a bull market, man, the gains are going to be so sweet for Tesla. And not just for Tesla, man, for all other good companies, Apple, Microsoft, Google, Nvidia, all these good companies. But Tesla, because Tesla is Tesla, they are here and competition is here, it doesn't really matter. And in 10 years time, when the stock price is here and you bought here 200, 300, 400, 500, 100, 50 bucks, 600, it doesn't matter. But anywho guys, again, I have to say this again one more time, take these videos with a grain of salt. They're my predictions, they're my research that I do, and I do go off them. And I do keep things as conservative and realistic as possible. So again, take this video with a grain of salt, do your DD, more research is always needed. But if you guys are looking to retire on Tesla stock by 2030, man, check out this video, man. It's an updated one and realistic one because we go from ultra bearish all the way to the ultra bull. So we have many scenarios to look at and you guys can judge. So check it out. You won't be disappointed. And don't forget to subscribe, guys. And I'll see you guys in the next video. See ya.